Hi, Felicia. Thanks for chatting with me today.
Look forward to it.
Awesome. Well, let's jump right into the questions I've got for you. Most clinic owners work with a few different financial professionals, an accountant, maybe an investment advisor, a lawyer. From your perspective and your experience, what should clinic owners know about building the right financial team around them?
Yeah, thanks. That's a great question. When we certainly work with a lot of clinic owners, and what I find always when they come to see me is they would have some of these professionals that they're working with. They have an accountant, they maybe have done some investments, they bought some insurance, they have a lawyer they're setting up, and yet I think the question that they have in their mind is, am I doing okay? Am I doing well? And so it's really actually very common for them to feel unsure, even though revenue is growing, there's money in the bank, but are they going to be okay for the future? This is actually something that they're concerned about. And I think that the reason why that's the case is because most people don't realize that the root of financial concern isn't actually a lack of, accounting or a lack of putting money away for investments, but it's actually the lack of integration of all these topics. And usually the team that they have are not talking to each other. And so then the business own, the clinic owner themselves is left to figure out how to glue all these things together. I would say, it's maybe very similar to imagine if you didn't have a family doctor and all you had were, I gotta go see a specialist. And then, for my arm, I'm gonna see another specialist. I'm seeing this other specialist, but there's nobody that's actually looking at the common file or chart and can tie and make sense of everything. So I think that then, the clinic owner themselves are busy with your own clinic and growing your clinic. So then often it's really confusing. There's a lot of technical terms that's involved. And so you often, I find that, get into the case where you get conflicting opinions. So for example, accountant, like I use an example. So maybe just how much should I pay myself? That's something that comes up sometimes, like how much should I know? And so you go to your accountant, they probably will say, well, it's up to you, how much you want to get paid. So then how do you pay yourself? Is it salary or dividend? Guess what? It's kind of up to you. And then if you go to your investment advisor and say, hey, how much should I put away for RSP or TFSA? Or should I invest in my company, leave the money in the corporation? Or should I have a holding company? Or should I draw it out and put it in my TFSA or RSP? And they'll say, well, it's up to you. It's how much you want to contribute. So I think that the issue with this is just that the left hand doesn't know what the right hand is doing, and there's nobody really tying the pieces together. So you are often left as as a conductor, if you will, in an orchestra without any support. And you're already trying to figure out how to run your clinic. And the last thing you need is also trying to figure out how to glue all the pieces together. So I find that with your team of financial professionals, what you want to make sure is that you have someone who is acting as an integrator, and so that they can help basically pull in information from across all the different areas, from accounting to investment to insurance to legal to the corporate information versus the personal family information, so that you don't have to. And so it's not really about replacing any of these people. They're probably doing their job well. But it's about how to tie all these pieces together, and that supports you in your decision making.
That makes total sense. And it's almost like you're the coach of the team. You've got all these players in different positions, financial positions, but you need a coach who's got the vision for how the team kind of works together. So I love that. Now let's talk about profit, because once a clinic owner starts generating some healthy income, how should they be thinking about, what do I do with my profit?
Yes. So I love that you asked that question because that question sometimes I don't even get. I often get the question about, well, I have money sitting in my bank account and it seems to be growing, which is a good sign. And it's a good problem to have, right? So then, in the early stages of the business, most clinic owners are trying to figure out, how do I grow revenue, grow my team? And eventually, if they do a good job because they're working with you for marketing, everything is growing. And so then the byproduct of that is then you start to see money grow in maybe in your clinic bank account. And so the question I often get is just what to do with that money in the bank account. So I find that we have to take a step back before that, which is to figure out, yes, it's nice that there's money in the bank account, and we can certainly figure out what to do with it. But for long-term planning, we actually have to think about how much profit do I actually need? And so I do think most clinics have an idea of how much revenue or sales they're looking for. But often, as we grow, it's hard to figure out, is my margin actually getting better? Or am I actually doing more work but making less? How's my profit looking compared to my revenue? So the reason about why I think we should think about profit is because there's, the financial, I would say the CFO role as a clinic owner is you're actually a profit allocator. So there's three things you can do with your profit. The first one is you can certainly use it to reinvest in the clinic. So you can use it to hire clinicians. Are you going to expand to the next location? Can you reinvest your money into marketing and expand your clinic, right? So that's one thing you can do. The second thing that you can do with profit is that you can obviously pay yourself a little bit more. So we can talk about whether that's in, dividends or a salary. Do you pay yourself personally? Do it on, do you get a salary, or is it when there's money sitting in a bank account, you write yourself a check? Pros and cons of doing that. And then the third thing that you can also do with profit is that it's about saving for the future. So, right. So again, it's money that you may one day, perhaps you're going to exit from your clinic through selling it, or perhaps, it might just get closed down for whatever reason. And we're retiring. And so then we want to make sure that we have an alternative portfolio, perhaps, to help you supplement your income. So what we're trying to do as we're building wealth, we are trying to determine how to allocate the profit. Which one is to grow the business, which component is to pay yourself, reward yourself today for the hard work you're doing, and then the third component is to save it for the future. So I think that most owners make these decisions without a really clear strategy. They get stuck with figuring out, can I hire? Should I increase my caseload, decrease my caseload? Am I paying myself properly? So the answer to all these questions, again, depends on what stage we are in the clinic life cycle, where we're trying to go. And so we often would work with clients to reverse engineer is, to figure out, depending on what the future you want it to look like, then we're figuring out how much we need to put away, what needs to happen from now to then to make that happen. And once you have a profit goal, then we can figure out how much revenue you're looking for. And then from there, that's where I think, Isaac, where your role comes in, where they're actually working with you to say, here's my goal. Here's how do we do it? How do I make that happen? And then all the marketing and the sales strategy is tied in then to achieve that revenue goal, so that you can have the profit, so that you can have it for your future. And so I think this is where often financial planning meets business coaching. I do find that most people don't ask themselves this question, but that is something that is definitely important to look at. And often we may even have to take a look at where a clinic's financial, is it giving you the right numbers? So working with your bookkeeper, accountant to make sure you're getting a good snapshot of what your profit looks like from a month-to-month basis, so that you can make decisions based on those numbers. That's something that's really important to consider.
I love that idea of working backwards from profits and, through the different stages of the business all the way up to top line revenue. Now, for once a clinic has started saving, building up a little bit of value in their corporation, what are the key things that they should be considering for that long term?
Yeah, I mean, this is where I think we all want to get to, where, geez, Felicia, I have too much money sitting in my corporation. What do I do with all this money? I love it when that happens, but that is also often the entry point of when clients start working with us. Um, Often I find that the reason why money is sitting in the corporation is usually because it's tied to tax, is because of tax reason. They can certainly pay themselves more, but then it just means that they're paying a higher tax bill. Sometimes they're not really sure, do I put this away because I need it? Should I, put it in cash? If it feels like it's just sitting in cash, not working for me, what else should I do with it? So I also think that this is where often business structures might want to, we might have to pay attention to the business structures in your corporation. So again, some people might already have this where where you're incorporated, and then you have what I call an operating company, which is where all your billings come in. At some point, it perhaps makes sense to consider having a holding company. So this is another company where you can move money from from your operating company up to your holding company via something called intercompany dividends. And that is not something that's taxable. Again, I'm not offering tax advice here, but just sharing that there are some definitely tax planning strategies that you can use, and you have to work with your accountant to figure out how much should I move up. But often I find that when you start building value in your corporation, the key is that I find money generally just goes away if it doesn't have a job. So if you have money sitting in your corporation, and you don't have a plan for it, often, months later, years later, you're just like, I don't actually know what happened to it. And that's just because that money didn't have a role. So what I think is important for clinic owners to think about is that you want to consider how much do I actually need to put in my operating company, access money, decide, do I pay myself? Do I expand the company? Or do I save it for the future? If I'm going to save it for the future, then where should I, grow this money so that it can grow in a tax efficient manner? That often involves maybe creating a holding company, deciding how much goes into the holding company. How do I pay myself? Do I pay myself a salary or dividends? And should I do investments? And if I'm going to use that money to invest, do I do GICs? Do I buy stocks? Do I buy a life insurance, permanent life insurance strategy, which has the ability to shelter some of the growth right within the corporation and can come out mostly tax-free in the future and pass it to my loved ones once I'm not here. So there's all these considerations, and I, think it's very hard for me to say this is the answer, but the strategy often depends on your stage of life, your family situation, your business goal. So if you're in the early stage, you might be building reserves to expand the company. But once you have that, your operations are going pretty well, then it might be about creating an diversification. It's about creating an alternative portfolio that should the clinic, not do well in the future. I have different options. I have investment portfolio. Maybe I want to have real estate. Maybe I want to buy the space that I'm operating from so that I can have a rental income, right? And have real estate holdings in the future. And so these are all, considerations to think about. And so what I would say, again, is having a long-term plan that works for the current situation where it helps you defer tax or save on tax, but also in the future, it gives you diversification in terms of different ways of generating income. I would say for most clinic owners, the clinic is probably where most of your income and your money is generated from. But in the future, what I like to say is we want to shift from a job to having assets. So the job is something that you always have to, show up for work and do the work to build the income. But then once you have assets, whether that's a clinic that has multiple practitioners where you are then not needing a very heavy caseload, so it's generating income for you, or it's a real estate some sort of investments that pay you rental income, or it's an investment portfolio that's generating growth and passive income that you can withdraw from in the future. So those are some of the things that we want to consider. And so we don't, typically want to just stick with one. We want to make sure that as we're growing our wealth, we have different areas and different asset types with different profiles that we can withdraw from, because that will ultimately give you flexibility in the future, to have multiple taps and faucets that I say. I can turn on this tap, turn it off. If the markets are not doing well, hey, I have another source of income. Or if I want to slow down from my clinic, I have another source of income. So those are some of the considerations that we might want to think about. Often with the consultation with the financial planner, with the accountant, with the lawyer, to create structures that are both give you income, but also in a tax efficient way in the future.
That makes total sense. And yeah, having a plan for your profit. I know when I have money in my bank account that I don't have a plan for, it tends to disappear. I'm pretty good at spending it. So it makes sense. It applies to corporate, accounts as well. Um, Now for clinic owners, business owners, hearing all this amazing financial advice, and they're sitting there realizing, oh, I do not have a plan. What's the best next step for those people?
Yeah, I think that again, most people have something going on, right? Like, you've done a good job creating your clinic and growing it and getting to the point where it's profitable and there's money at the bank. All good. I think that often, then it I say that it changes from science to art, because then it's up to, like, there's a design element that comes in. So I would say the next step is often, to know that, first of all, you're not alone. Most people, most clinic owners I talk to get to this point where they're doing the best with what they have, but then no one's ever helped them really connect the dots between all these different pieces. And so I would say then, the next step is to take a look at learning how all of these things integrate. So what we do is we help people integrate, from your business goals, right? We talked about revenue goals, to profit, to allocation of the profit, to figuring out what profile the asset should be in, what kind of risk tolerance, what type of pattern that it's going to give you income in the future. And then integrating all of that with tax planning and with the future, perhaps even estate planning. So one of the things often I often tell people that your accountant and will probably tell you that yeah, they can definitely help you optimize tax for today, optimize tax for the future, but often they are looking for you to give them instructions in terms of what you want to achieve, and often even understanding what that goal is. Sometimes it's helpful to just say that these are the different options that you can have, and here's what's important to you in the future. And so at Clarity, we have a way that a process that we actually guide our clients through to understand, like, where you are now, what's missing, how to move forward, and that integrates all these different areas. So from your business goals, to your exit plan, to your investments, to your insurance, to legal stuff, shareholder agreements, employment agreements, all that kind of what needs to be in place, to estate planning in the future. How do I make sure, if I have children, I want to support them, what's the best way of supporting them when I'm not here, if I'm exiting in the future, if I want to exit from my practice, how do I do succession planning? How do I then, extract the value that's in my corporation? How do I pay myself without losing a ton of it to tax? And so those are all things that we can help you integrate. And I think that we don't have to solve everything today, but the next best step is often to just get clarity, to have, to be clear on where the gaps are and where to go from here. I would say there's actually two different ways to engage with us. So we do have a financially smart business assessment on our website that you could do to just it takes a look at all these different components, and you can answer the question. Takes, I think, about 5 minutes, less than that maybe, and then it gives you priority for which area you should work on. The other one is that, if you said, I've never had anyone help me pull together, can you just take all the things, this is where I am, where do I go next? That's certainly something that we can support you with as well.
That's fantastic. And I love that how you articulate it as almost financial design, and there's some art to the science, and it's all very bespoke to the owner and their life and their goals for the business, their goals for their life, what's going on. And so thank you so much for just sharing some of your wealth of financial knowledge. And if you are a clinic owner who's needing some help with their financial planning, financial strategy, profit allocation, all of this stuff, I really want to encourage you to chat with Felicia Lee over at Clarity Planning. And thank you so much again for chatting with me.
Thanks so much, Isaac.